Ihr könnt auch Platz nehmen, nicht auf der Kurz. Ja, ja. Okay. Welcome, everybody, to this second reverse pitching session. So for those of you that have never seen reverse pitching, it's basically, who's a startup in the room? It's basically what you get to do every day, just that the VCs have to pitch themselves, and then their portfolio startups actually enter and grill a Q&A. After their portfolio startups are completed with the grilling, you get to ask them also questions, okay? So I encourage all of you to think about questions that you would like to ask these fund managers, to also see if it makes sense that you would engage with them and have them as your investor. And if you have any questions, you can let me know. When we open towards the audience at the Q&A, I will hand around the microphone. So my name is Isabel Siegrist. I'm also an active investor, and I think it's a nice format for startups actually to see what we investors have to offer towards you. So I'm going to open up with the first combination, and it's going to be Niels Lang from High Tech Gründerfonds from Germany. So pleasure that you're here, together with Morrone Falahi. Is that correct? Oh, sorry, I'm looking for Moritz. Sorry, I'm like going just out of the row. Moritz Flutscher from BTRI. Please, the stage is yours for 6 minutes. If you go over the 6 minutes, I'm going to bail you out.
Thank you. Thanks for having us here today. Niels from High Tech Gründerfonds. We are a Germany-based seed stage, sometimes pre-seed, sometimes late seed investor. We love anything technology that can be from hardware to deep tech to life science to software and B2B SaaS. I think what distinguishes us is we have an approach where we'd like to have the buy-in with our teams on the investment thesis. Very early, work with the teams together to outline where we're heading to in 5 years, in 10 years, work on the vision and also on the path to get there. We met Battery, Moritz. Maybe you already have questions on our pitch, on our fund.
So, does this work?
No.
Maybe this one? Yeah, that sounds better. We were just briefed that I should grill the VC, which is interesting. So we met actually even before we even started our company. So maybe there the first questions, how do you go about and try to find pre-seed startups, especially, which very young companies, and you found us, you visited our labs even before we started the company.
We maybe a bit on our background. We have half of our money from is public money, and we also use that as a mandate to early get in touch with startups who are not yet fundraising. Basically, the idea so that once you fundraise it, you already have the vision and the basically data points that VCs would look at, so that we can help them get on the right path early in their process. And this is what we do. We are close to universities. We attend events. We give workshops. We try to best give our knowledge and our experience to prepare startups for once they start fundraising.
Thanks. And then maybe for your due diligence process, because for example, for us, you reached us, we had a very different product market fit in mind. Back then we thought we built batteries for space, which we realized it's not the quickest entry to the market. How do you do the due diligence of very early startups which not even have found product market fit yet?
Yeah, I'd say most of our non-software SaaS startups don't have product market fit at the point of time when we invest. So it's a commodity. We approach that by 2 paths. One is having a good understanding of the customers. That could be through reference calls, that could be in conversation with you, that could be on other information available. And the other part is if it is on a technological base where we would need a certain domain expertise, we would also include external references, hire them to get a tech or a deeper evaluation on that part.
Thanks.
Which I think we have done that with you.
Yes, indeed. We had a tech due diligence paid by you, and you even helped us finding the right market initially before investing. Then maybe another question, because you indeed have a lot of finance from the government, and I think if I'm not mistaken, you are the most active pre-seed investors in Germany. You have the most exits, but not the most high-ranked exits in terms of valuation. So what is your ideal exit scenario for your portfolio companies?
Like that question. So we have a 500 million fund that we currently invest from, and we're very early stage, so we have roughly 40 investments per year, new ones, plus all they follow on, which puts us in a space where we don't have the largest seed tickets ever. There's other capital which is going a bit further, but we have a diversification through the sheer mass that we put through our channel. And that may be one reason why we have a lot of exits, but not always the top performing one, or where we don't have the ownership, which would then grant us the real top exit on that path. Yeah, yeah. Well, we have, I don't know, over 20 years now that we invest, we have, I think, 4 or 5 unicorns. It's okay-ish, I would say. We can do better.
And I think you have a lot of exit to German industry as well.
We have.
They also invested.
We have.
I remember initially when you invested, I got a lot of introductions to the German industry, which are also LPs in your fund. I'm curious, do you track this? Who the startups work with your LPs, and is this an active interest of you?
Yeah, we don't track it systematically, I would say. It's more on a personal level, where our fund investors, so we have roughly 40-ish fund investors from the German industry, from large corporations to Mittelstand, and it's on a personal basis, whatever solutions and products they are actually able to take and to incorporate.
Thanks. And then maybe another question. So for early stage startups, the introductions to later VCs for follow-up rounds is very important.
Yeah.
How do you do this?
That's a personal strength of us. No, we have at least we have one portfolio day per year. It's the family day that we host next week in Berlin, where we have roughly 1,000 people attending, all our portfolio companies plus venture investors from Germany, from abroad, from the US, who are well placed for all the follow-on fundings. Specifically, not only the top ones that you already have on your list, but the ones that are more focused.
Okay, stop. It's over.
Thanks.
Good job. So now I would ask the audience, you can enter also into grilling Niels, but you're also welcome to ask Moritz some questions. Please.
Thank you. Thank you. Thanks for all that. Niels, this is more of a question for you.
Okay.
When you're looking at hardware, pure hardware plays, TRL4, TRL5, don't have a product yet.
Yeah.
What for you, how do you explain scalability? What is going to no longer be a red flag for such a business?
First of all, we do invest in these early stages. You have either tech risk or a market risk. If it's like a high tech risk, I would want a lower market risk so that we are sure that if we get through this tech, then the market is great. That being said, on the scaling, we would assess jointly with you if we can really focus on the core innovation on that technology and work with partners, outsource other parts of the hardware manufacturing or production process at the end, so that we can still keep it hardware and capex heavy, but capital light or capital efficient.
Are you happy with that answer?
Well, almost. Close enough. But what I was talking about is not necessarily scaling the company itself in the production, but the scalability of the product within the market to hit that unicorn status.
Okay, yeah. Then there would be 2 paths. One, either how to increase the footprint in that value chain. Maybe you already have a core invention, and we can jointly work over the next years on taking a bigger grab on that value chain. Or if that core innovation is so versatile, then we can use one industry or one application in the first case to have a ground floor, and then divert horizontally into different applications, use cases, industries. Either one of the 2 should be a possibility. Otherwise, we're not going to hit the top ones.
Please. David?
Thanks for the nice intro. I was wondering, with your geographical focus, do you have to, and also with the differences between your different funds, do you have to invest a majority in Germany, or do you have, how many out of your 40 companies can you do internationally, etc.?
Yeah, fair question. We have a 30% quota that we can use abroad each year, and we fully use it. And we use it mainly in Switzerland, France, UK.
I think that's for all IFE-backed funds, right? Yeah. So maybe, yeah.
We're not IFE backed.
Oh, you're not IFE-backed. Okay.
But similar concept.
Okay. More questions? Okay. Here you go.
So a very theoretical question. Hi, I'm Amina Farouk. I'm with the World Economic Forum. And if you had, let's say you're at this event, what would be one thing that a startup that comes up to you says that sparks your interest immediately?
That they don't know how to answer to all their customer requests, because they get so much inbound requests that they don't know how to handle. And
Thank you very much, Niels. So good job, Niels and Moritz. Appreciate it. And so now we're going to have next up Ariana from DART, together with Xian Viena from Testmate. I will take this one. Please, the stage is yours for 6 minutes.
Oh, I'm scared now. This is not what they told us in the brief it was going to be, but it's okay, we'll adapt. Hi, I'm Ariana, I'm with DART Ventures. I'm here representing a fund that is focused on European startups that want to go to the US. We back health and climate tech at an early stage, usually pre-seed or seed, and then help them in figuring out how to go to the US market. That may be validating some assumptions that they have or changing them, making a go-to-market strategy, having first pilot partners to engage with, and then once there's a clear strategy, it's about fundraising in the US. So our goal is to get in by seed round and then help you raise the next round, the A round, in the US. We have a small team here in Switzerland and one in San Francisco. My partner Sophie is leading the San Francisco team with venture partners that are experienced entrepreneurs and have a sole purpose of helping our startups enter the US market. And Siavina and Testmate is one of the startups in our portfolio, and I am so curious about what questions she will have to grill me. Go.
So my first question is, you've given a very nice introduction to DART and what you do. How do you think you've applied that thesis to Testmate?
Ooh. So I get to pitch you, that's good. No, so I think what was great for you is having partnerships in, specifically for you with San Diego State University in California for your clinical trials, finding the right KOLs to work on that, but also first hires. You already have team members from the US in your team, and then of course adding US investors to the cap table and fundraising before the round and after the round and preparing and then going again.
Apart from the US strategy, which is very interesting and unique, why else do you think startups in Switzerland should come to DART Lab and take an investment from you?
Apart from the US, I think it's the relationship we have with our founders. It's funny for me to say that instead of you. I hope you agree, and otherwise interrupt me. But especially at the year after the investment, when we were in a very active time, you and I talked weekly, be it preparing board meetings and had to get messages across to strategy, how much are we raising, with whom, with what partners. So with that close interaction we have on the US market entry, of course, comes a collaboration that goes across all areas. And having these weekly or regular exchanges, I think was helpful also in navigating other investors.
I can attest that that is very true. Can you share other examples from your portfolio about how having this US market entry has been really successful for them?
Yeah, maybe another startup example is Imply with also a female CEO, Louie. who we've helped find a first board member who was also a board member at a major fertility chain in the US, and their product is targeting the IVF, the fertility space. We helped her get the first US investor on board, and are also working now with helping her close her A round with US leads. So she raised as part of the seed round already with US investors from our introductions, and is now continuing for the A round. As well. Another example would be Bayer Fertility, which is also a female-run company. Not that we have that focus specifically, but we happen to have about half of our portfolio that is female-led, and 75% that has at least one co-founder. And there we went down to doing discovery calls with her, splitting up a list of 100 OBGYNs that we called together to really get a feel of what does the offering in the US market need to be and to validate our hypothesis. So we do everything from helping you figure out where to put your domicile and which partners to work with on the legal side, to rolling up our sleeves and talking to potential customers to really grasp what the offering is going to be.
It sounds like you guys do a lot, which is awesome. Is there anything else that you'd like to do for your startup companies that you're not doing now and you one day want to do for them?
Yeah. For Fund 2, we are thinking about adding a regulatory component, so helping navigate the regulatory landscape that's been, especially now with the US, a little difficult. You know, we get questions of, does anybody still work at the FDA? We think currently they do. But obviously it is much more difficult to plan and forecast with the US, which makes having people and boots on the ground more important.
That's awesome. I think with that, we maybe open up to the floor if you have any questions for Ariana.
Or Savina.
Or me.
Yeah, you can take some too
I can
now.
take some too.
What questions do you have for the two on stage? Everybody's like meditating. Okay, here. Jonathan?
Someone has to kick it off.
Thank you.
So you talked a lot about helping out your funds, and you talked about receiving it. When does it become too much?
So I think what's really great about DART is that they always ask for feedback. And I think that's something that I really appreciate. Like, I don't think investors often ask for feedback on their collaboration with startups. And we fill out a quarterly update. And at the end, we are asked to rank DART from 1 to 10 about how helpful they've been that quarter to us. And ask how else they can be doing better for their portfolio startup. So I do think that's very, very unique, considering you're a small team and you're a small fund. So yeah, I think that's a great thing to highlight.
From my perspective, we make sure to not make more than 4 investments per year with startups that will need services in order to be able to manage our time. And there are times where we have a weekly check-in of 30 minutes because we're not working on any topics together directly. And there are times where it's a day or 2 of direct collaboration. And it's getting these things past each other. But so far, it's never been a problem.
Who else has a question for the two? You can also ask what Testmate does. You know, it's okay. Please.
This is a question for Ariana. How do you bridge the different valuation view between the US and continental Europe, and also the different venture capital philosophy, which is, I'm involved as a board member in several startups where we do have US and European investors. Yeah. And usually the US investors have a big laugh when you make a valuation proposal which is too low for them, but very much too high for the European investors.
Yeah. The goal really is I'll answer that one first and the other one second. The goal by A round is to have a US lead. And then the US lead sets the valuation. And for us, as we're closing a seed round and also trying to get other co-investors on board, it's get in now while we still have a European valuation. So that's part of the value add for our LPs, is seeing them early, getting in on the cap table while they're still in Europe, and then helping them succeed in the US. And the second question now already escaped me. What was the second part? Was how do we bridge? Sorry.
It's the question about the different philosophy and how founders or European founders or tech founders are usually much more conservative in their company building than in the US.
Thank you for repeating that for my Swiss cheese brain. It's the short answer is the slide that goes last to a European investor goes first to the U.S. investor, and that's the big vision, right? The U.S. Investor-focused pitch is more focused on the big vision, and in Switzerland we tell them how we're going to do the next 18 months. Okay, thank you.
Thank you very much. So next up, we're going to have from Privilége, Angelica, and from Avelo, Melanie. Thank you very much.
So hello, everybody. This is a quite interesting place to be. Usually it is us investors grilling the startups, and today I, as a general partner of Privilége Ventures, am pitching to Melanie, and she's already a portfolio company, but let's pretend that you're not. So I am pitching today the fund Lumira. We have a fund that invests in early stage in health tech, agri-food tech, and clean tech in Europe, with a strong focus in Switzerland in gender mixed teams. We pride ourselves in trying to be different in terms of bringing both a financial structured perspective, but also a managerial perspective, because both of the general partners at Privilége have built their own company. So we believe we have been in your shoes and we can bring something different. And for us, it would be a privilege to answer any questions and see if we can be on your cap table.
Thanks a lot. So that's maybe the perfect segue to the first question. Why should I want to have you on the cap table? Can you be more specific on the 2 points that you mentioned?
Absolutely. So what we do is we try to select companies that are thoroughly aligned with our vision of growth, with the vision of growth of the fund, the timeline of the fund, and also the vision of the founders. We believe that the founders are the most important part of our selection, and we believe that you and Toby are amazing founders, and we would love to work with you. What do we bring to the table? We bring a strong portfolio management from our side, which allows us to do follow-on rounds so that we will not be diluted. Also, what we like to do is to be relevant investors without being overwhelming investors. So we tried to guide and help steer both strategy and governance, but you're always in the driver's seat. We never take that away from you.
So can you tell us what this specifically means on a daily, weekly, monthly basis? How much involved are you, and how are you supporting, or maybe also decide not to support?
Absolutely. We try to support the companies that we select. We are a small fund. We usually do anywhere between 5 and 6 investments per year, maybe even 4 to 5. So we try to be close during the due diligence and onward. During the due diligence, we realize how much the founders want us to be involved. It changes from founder to founder, but we found that a constant check on a monthly basis is always good. We always send out surveys every quarter so that the founders can tell us what we're doing well and what we can improve on. And also we try to be involved so that we can see the red light before it's really dangerous and before we can no longer help, but we can still kind of steer the boat in the right direction. So that means calls, and also it means that we have a totally open line. Our portfolio companies have our phone numbers, they have our WhatsApp, they have all ways of getting in touch with us, and we're always available, pretty much 7-on-7, which sometimes doesn't make our families happy, but it works well for us.
So I can definitely testify to that. So tell me, as a startup, I'm busy with building my company, but there are investors have certain demands. How do you balance this? What are you specifically asking from me as a startup? That do I have to report on a template monthly, on a quarterly basis? What do I need to do to make you as an investor happy?
Thank you for that question, because it's really important. Sometimes startups, once they get the money, they disappear from the radar, and they only go back to the investors when they need money again. That is very frustrating. It's a little bit like in a couple. You don't want to hear from the couple or from the child only when they need something. It's a good idea to keep us informed of both the progress and what we can do to help. So for example, if you're opening a financing round, we would like to know in advance to see if we can help you find co-investors, and also see if we can follow on. On a regular basis, today's days, especially with artificial intelligence, you as a founder are facing incredible challenges and also amazing opportunities. So the world is changing too fast to hear from you only once a quarter. So every month would be really nice to have a one-pager, however schematically you want to put it, that tells us how you're doing in the key areas that matter to us.
Mm-hmm. And so as a startup, let's say I'm still in the fundraising mode and I have to decide rather quickly, is this the investor I really have a realistic chance? So how do I know this? What are your specific criteria so I can judge myself whether it's worth investing a lot of time?
Well, this is something, it's a very good question. And actually, I always would like to caution you and all the other startups to gauge the time you want to invest in a certain investor. Sometimes, especially angel investors, make the mistake of trying to take too much of your time for a very small ticket. We are very mindful of that, and we try to do the pre-due diligence without bothering you too much, and then we get in the due diligence and we really work for you. What you're going to see clearly from the first meeting, we decide what are the investability criteria, and we will tell you. So it's important to have a good founding team, important to have a great product that really can make a difference in the way life is lived in a certain niche. We'd love to have a good market, because at the end of the day, we need to make money for our investors. So we'd like that product to scale. And at the end of the day, we want to see a strategy, an exit strategy. We don't want to have lifestyle businesses that will never want to exit, and we're stuck with them for the rest of our lives.
So can you describe the due diligence process a bit more in detail? How many weeks, months does it take?
I would love to do that, but I see the bell.
Thank you two very much. We're opening up for Q&A for the two of them. Who has some questions? Yes, please. There you go.
I'm so impressed by the public speaking and the flow. How do you prepare to, when you find the right investor, how we can, before meeting them, or just get ready for this opportunity coming?
Is this a question to me or to
both? Both. It's impressive.
Start.
So I can start. So ideally, if you know that you are going to meet this investor, you do your homework first. And the good websites of investors have their investment criteria quite clearly. They also say if they do a lead or co-lead, which helps you, because if you don't have a lead, then usually it's tricky then to get, and you can waste a lot of time, in my view, finding the smaller tickets but not having the lead. And then specifically that you can check yourself and also see the good ones have the portfolio companies on the website. You can see kind of what startups are they looking at. Do you feel like you could fit to their portfolio, so that you really have a good idea on whether it's worth pursuing the investor, because it takes a lot of time and you want to put your energy into those where you see the highest chances. So as much of a due diligence you can do, and then maybe check, do you know someone who knows someone there, or even a startup that you can ask first, is it worth? So what is the investor like? So kind of do a little due diligence first, depending on the importance you may want to dig deeper. And that helps to be then prepared and then ask the specific questions. I like those conversations where you as a startup can also ask questions, and it's not just you on the hot chair, in my view.
And in terms of how do you do the flow, you try. I always say to everybody that it takes about 100 pitches before it comes out really well. After you do about 100, it comes very, very smooth. And also you have to have your heart into it. You really have to believe what you're doing. From our for us as investors, we like the power of synthesis. In 3 minutes, you need to tell me exactly why I would want to engage with you for further conversations. The gift of clarity, you need to let me know really, really well how you're different from anybody else and how you're going to help me make money from my LPs and make a difference in the world. Did I answer your question?
Yes. Do we have another question for them?
We have 19 seconds,
Yeah,
guys.
you have to answer fast. I see your timer.
Do you invest in early stage startups? And if so, what are you looking for in an early stage startup?
So as I was mentioning before, we do invest in early stage, pre-seed to Series A. And what we're looking for is some investability criteria. Bye, everybody. Thank you.
Thank you very much. Last but not least, we have Spicehaus Ventures, Daniel, founding partner, and Mohsen, CEO from DAAV. Thank you.
Hello, everyone.
Hey, everybody. My name's Daniel. I co-founded Spicehaus together with Teddy 8 years ago. We invest in Swiss, B2B, software companies in the early stage when they already generate some revenues first. With me on the stage is Mohsen. He's the CEO and founder of DAAV. They offer an autonomous mobility device at airports for people with reduced mobility. Now, given that we're here at the barbecue event, it's great that I can add some spice. There was a very memorable day. It was the 10th February 2023 when I received an email from Mohsen. That was the first time I heard about DAAV. He sent me his pitch. We had a call, a video call, and already in that video call, I told him we will not invest.
That's when the drinking starts.
So I'm handing over to the best dressed barbecue chef. How did you feel about that when I told you we won't invest?
So, I mean, it was definitely tough because we knew that they also invested in the technologies that are relevant to us, and we didn't see any competition. But also not only the technology, we saw even the markets and the business models like that they are looking into, they are very similar to what we want to do. So that was quite tough, but also it opened up the relationship that we could ask basically any advice that we needed for our company. And also sometimes as founders, we underestimate how much great advice you can get from an investor if they are in a relevant field. And that was the case, basically. We took, I think, 1 year. We kept in touch, more than 1 year. We kept in touch. I was contacting you every now and then also regarding the, even for investors, like if he knows angels that they may be interested at this stage, if not a VC. And then we also got in touch with some of your portfolio companies actually at the time to know what's going on there. But yeah, and then when the communication was very transparent, we knew exactly what are the key factors that we need to prepare in our business to be successful, but also be VC ready for Spicehaus specifically. And then when the time was right, I approached again, like formally, not just like texting on WhatsApp. That's okay. We need the money, and we believe that we are very close to the KPIs that you had in mind when we discussed the business case. And then afterward, the due diligence was quite fast. We didn't have much runway to survive too long, so we asked transparently in the beginning that we need the money fast. And we were the first one also with the second fund that you have, right, that you invested on.
Correct. So we have 2 funds. The first fund is closed. We invested in 20 companies. The second fund is live. It has money. We're investing. DAAV was the first investment we've completed. We're now at 3 investments. I'm still not sweating, Mohsen.
Well,
so you want to grill me more?
What changed your mind to make this amazing decision to invest in DAAV? Right? I hope you're not regretting, right?
I think I wouldn't have invited you otherwise. Look, there are always a lot of factors. At the end of the day, when you invest early stage, it's all about the team. I think that's something every investor is telling you. It's about the team, it's about the team, it's about the team. But it's not just how great the team is. It's actually you have to work with them together. And I don't want to say it's like a relationship. It might sound a bit weird. But you're going to be together for 5-7 years. And if you don't have the chemistry between the investor and the founder or the management team, it's going to be a very tough period of time where you have to work together. So we have actually declined investments that on the paper were very interesting, but we didn't feel the chemistry. And I very much encourage any startup to decline an investor if you don't feel it, just because they have the money.
I will ask another one. So if you remember, actually, Mark, our advisor, he knew you and he did the introduction 2 months before I emailed you, I think. But as a startup, do you prefer that we come with an introduction to Spicehaus, or if in the event we see you and we talk to you, or the investment management team, Jonas and I think Yannick also, like he's not here today, but which one do you prefer? Like to come with introduction or just come and talk to you guys?
It doesn't matter at the end of the day. We really try to respond to every email that we get. It's our karma principle. It takes a lot of time. If you obviously have somebody that knows us already, it's like a little bit of a higher qualification. It's a bit more trustworthy. I encourage to do that if you can, but at the end of the day, it shouldn't matter because the criteria won't change for an investment.
We don't have much time, but I will ask actually, in addition to the funding that the startups gets, what are the supports that you provide on a systematic base, I would say?
We have created the Spicehaus Growth Academy that consists of different things, and I think the most important part are the Spicehaus speed sessions, where we really have a tailor-made program where startups can benefit for scaling, for growing faster, for accelerating, avoiding some mistakes that are quite common, and it really depends where you stand. I think, Mohsen, maybe you want to say something, or let's just say board meetings is one thing, how to prepare for them, how to manage your FX risk, your liquidity, your business plan. There are a lot of things we provide support on.
Thank you very much, Daniel and Mohsen. We'll open up for questions for the two of them. Who has some questions? Okay.
Thank you.
So, sorry, since you wanted to sweat a little bit, between the two of you, what has been the single most difficult conversation post-investment?
Ooh, I like that one. Thank you.
Can I answer this one?
Please.
So the thing is that, you know, when they say that this meeting could have been an email, sometimes a board meeting can be a knife fight, basically. And I love the fact that we also grill any advice that we get from the board. Like, even if they have a lot of experience, we really go deep in, and like we don't take anything personal on that. But I would say the toughest one would be like to make sure that we make the right decision and we fight it out. Like to make sure that we don't want to make a decision that anyone in the board is against it, even if it's one person. To make sure that everyone is on the same page and they're supporting it. That's the most difficult part, I would say. Like that to make sure that we're all united to go forward. Like,
Daniel, do you agree?
Obviously, I agree. But in this bilateral relationship, I think it is quite symptomatic that it's difficult when you see so many cases, when you have been discussing with startups similar cases in the past, to convince a founder to do it this way and not that way. You know it. I know it. I really know it.
But we try it, so again.
Sometimes. I think that's really the hardest part, when you as an investor try to convince a founder and they don't want to listen.
But also, I would say, on his side, one of the difficult things is that, like, I don't know why he doesn't block me on WhatsApp yet, because sometimes I text or call even at 10, 11 p.m. if I have an idea. So,
my wife loves Mohsen.
Yeah.
Thank you. I like that question. Do we have another good question coming up?
Come on.
Yeah. Do you understand where Spicehaus invests? No.
I will ask a question, actually.
Yeah,
so
Mohsen,
the thing is that, like you mentioned in the beginning, that you mentioned that you invest mostly on softwares, but in DAAV we have a mobility device. What was the reason that you ignored that part for us, or didn't focus on that and invested?
You're not manufacturing the hardware.
That's true.
So we don't want to invest into manufacturing companies. We still say 51% should be software. There can be a hardware component, software-enabled hardware. At the end of the day, it can be externally manufactured.
Thank you very much, Daniel, and also Mohsen. So from my side, a big shout out. I hope you like this format, and thank you to all the VCs and their portfolio startups that were here. And I would say talk to them while they're still here, and I'll close out the session.